practice or are you running a business? Valuation is the ultimate KPI.
Hey there, it's Mike Langford. Welcome to another episode of the Modern Financial Advisor podcast, brought to you by Trulytics by Envestnet. This week on the show, I have Mark Gochnour, Head of Advisor Services at Dimensional Fund Advisors, with me for a fascinating conversation about some of the discoveries he and his team have made about client preferences and behaviors. Now, I feel like we're on a roll lately with having several industry leaders come on the show to share the findings of their surveys. And Mark really brought the thunder in this episode. One thing that I think you'll find that really jumps out is how Mark translates the survey results into actionable steps for you and your business. My favorite one is when Mark shares how early stage advisors, so-called Generation 3 and G4 advisors, can help develop their presence with high net worth clients. It's really fascinating stuff. You're absolutely going to love it. Okay, before we get to the conversation with Mark, please make sure you subscribe to the podcast on Apple Podcasts, Spotify, Google, Amazon, the YouTubes, or wherever you like to get your podcast jam on. And if you have a question or a suggestion for a guest or a topic for the show, hit us up. Simply go to Trulytics.com and use that little connect form there, or shoot us an email, podcast@Trulytics.com. We would love to hear from you. Okay, let's get to the conversation with Mark Gochnour. Mark Gochnour, welcome to the Modern Financial Advisor podcast. So wonderful to see you today.
It is fantastic to be here. Absolutely, Mike. Thanks for having me.
My pleasure, my pleasure. You know, I'm kind of a little mad at myself because you're in Austin, I'm in Austin. We could be right together hanging out, having beers, just doing what Austin guys do, beer, tacos, barbecue, whatever. So next time, absolutely in person.
Yeah, we can still do that for sure.
I love it.
We'll do it before and after. We'll do a podcast without it and one with it, and we'll see which one people like more.
I tell you what, I guarantee you they will even like the ones with beers more, because I've done a lot of podcasts and videos over the years when we've been having recreational beverages. Always more fun. So, anyway, all right. Well, listen, I wanted to dive in. I'm so thrilled that you and the team suggested some of the topics for today's show, because I think they're so insightful for our audience, the modern financial advisor, right? You and the team at DFA are constantly studying advisors. And in fact, a couple of years ago, I had Catherine Williams, the head of practice management at DFA, on the team. And she talked about the value of benchmarking for financial advisors. And it was a really fascinating conversation that shined a light on how advisors can improve their business by learning from their peers, right? I thought that was really cool. So today, we're going to dive a little deeper with some fresh, actionable insights. So let's kick things off with some of what you have learned from your global investor study, which looks at the world from the perspective of the clients of advisors. I think this is a really good way of spinning things around. Like, how are the clients seeing the world? So let's dive in.
Oh, you love it. Yeah. And thank you for the kind words there. It's something we can talk about this stuff all day long and love it. And, let me just go back to, you mentioned that we call it the Global Advisor Study, where, over the years, we're just working with various advisors around the world, really. We'd get the questions, hey, what are you seeing other firms doing that's working really well?
Yeah.
What are you seeing firms doing that maybe it's not working so well? And we said, well, let's just formalize that with some real data that we can share with the clients we work with. And so we started that. We call it the Global Advisor Study. I think we just wrapped up entering our 12th year of that one. And then probably about 5 years ago, the advisor said, I love what you're doing on the advisor side. I'd love to understand more about our clients, the investors.
Yeah.
And so we launched the Global Investor Study, which you just referred to. And, the whole goal there is just, what can we do to better understand the clients of the advisors? What can we do to better understand the client experience they're looking for, so we can all go out there and deliver a better experience and ultimately, provide a better experience for the investors as well as prospects coming in down the road. So, we learned a lot. Some of this stuff, it just confirms the things you're doing. Some of the things that challenge you as well of how do we think about continuing to evolve the client experience?
So, quick question, kind of to set the stage a little more, so that I think the audience understands the study and the people that are in it a little better. Is this a broad range, like spanning the whole spectrum from early stage investors, right? Clients who are really kind of getting their investment journey going, and more mature, and then maybe in the high net worth and ultra high net worth? Are you kind of looking at different segments as well, or is it kind of like one universe?
It turns out to be a little bit of everybody in terms
Okay.
of tenure of the relationship with the advisor, as well as ages, as well as various size of investable assets. And so what we do is we open it up to the advisors. It's up to
Mhm.
them to participate in however shape or form they want to. They can send it to all the clients. They can segment it by certain clients. They have multiple offices. They can segment it so they can see the responses from one office compared to another office, which I think is incredibly important because it's so important to think about your consistency of brand
Right.
across the advisors, across offices, if you are in more of a national type of firm. But what we get then is we don't get any client information, and we don't want it at all.
Right.
It's an anonymous study, so the investors are free to answer it however they so choose. But we do ask them some demographic questions because that's really important, and that's what we want to do is understand: do you see some variation in terms of
Yeah.
investors by size of assets, by their ages, perhaps, how long they've worked with a particular advisor? One of the things we have asked, interestingly enough, is did you work with an advisor before you started working with your current advisor? And I think the answer was about
Mm.
40% or so. Actually, did not, never had an advisor before. So that's kind of interesting
Interesting.
data, as well as you think about maybe the type of language you use with a prospect, because they may not have ever had an advisor. That's probably a very different conversation, perhaps, than somebody who has had an advisor relationship already. So we got quite a bit of information on demographics. We break the study up into a couple major themes. Part of it is, how do you think about investing generally? What kind of relationship do you want with your advisor in terms of how often do you want to meet? What is it you want to talk about when you
Mm.
do get together? And then how do you measure the value of the relationship, the value you're getting from your advisor? So really, really interesting information there. And I will say too that it's something we do globally. And
Okay.
so just for the audience to know, our major offices that we work in are obviously here in the US and in Canada, in the UK, Germany, the Netherlands, Australia, and then Singapore and in Hong Kong. So it's really interesting to see how these compare and contrast on a global basis from an investor's perspective.
I can imagine that was really interesting because, some of the attitudes about investing and so forth and what you hope to accomplish from your investing experience is different here than it is in other parts of the country, right? Like, excuse me, other parts of the world. Because some other countries have these, as an example, like Australia's got these superannuation plan type experiences for retirement, whereas we don't have that type of stuff
Mhm.
here in the United States. And right, so your expectations for what does retirement look like, that one financial goal of retirement is going to look, I can imagine dramatically different from one place to another.
That's a natural, I think, approach you take to this is, and
Yeah.
we hear it all the time, you will present sort of the overall results and people will say, yeah, that's great, but it's here, it's different. The
Yeah.
investors here think about things differently. And you're like, well, let's take a look at that. So you segment the data by that particular region. And guess what you find? It's remarkable how similar people are on a global basis. People are people. Wherever they are, people are people. And when it comes to investing and the emotions and things you're looking for, incredibly, incredibly consistent. So that's
Dude,
one of the major takeaways of the study itself.
I love that you use the people as people. I literally just had this conversation with my wife last night. We were at a store. We stopped on the way home. My daughter had a basketball game. We stopped. We're like, oh, she's like, we'll swing through Costco and pick up some things or whatever. Like, okay, fine. There's something there. And the Costco, this Costco is in a neighborhood that is heavily Indian immigrant people. So a lot of the shoppers there were, they're just different ethnic background. And we were walking by, and this little kid was with his mom, and she was trying to get him to get this snack or whatever. And she's like, "Mom, I'm gonna hate those." And he's flipping out. And all I started laughing. I'm like, little kids are little kids everywhere. It does not matter what your background is. Little kids are the same. I just like lost it laughing because like I've got two kids. Mine are 18 and 14, so past the point of having tantrums in a grocery store or whatever. But it was like it's exactly what you say. People are way more the same than you think it is, and I'm glad to hear your data actually supports this, and it's not just Mike Langford's like observations in Costco.
Well, and I'll give you a story, and I think maybe your audience will get a kick out of this here in the U.S. anyway. And actually, it's one of the findings that we see too.
Yeah.
So I'll combine two in one. I was presenting these results a couple years ago in London, And it was at an industry event. So we're kind of going through, here's what we found
Mhm.
from investors that participated in the study. And one of the attendees, she raised her hand and she goes, I could see how in the US they would answer that question that way. But my clients would never, ever answer it the way you just showed there. And the question was, hey, when you meet with your advisor, what is the number one thing that you want to talk about? And you ask the audience, and they always say something defective. Well, I want to see progress towards my goals, or what's going on
Sure.
in the current market environment. And the number one choice is, I want to talk about my investments.
Mhm.
And that's what this person was saying. Well, yeah, that makes sense in the US because the advisors in the US, all they do is investments. They don't do financial planning. Here
Mhm.
in the UK, we do financial planning and investments. And so it was kind of funny because I had the data there that actually it was number one in the UK as well as Canada and Australia. And then I reminded her that actually pretty much every advisor in the US does financial planning as well. I think what you find here in the US
Yeah.
is historically, traditionally, we've led with investments. And
Right.
then all the financial planning and retirement planning, everything comes with it. I think in some of these other countries, Commonwealth countries, a lot of times it's planning and then the investments follow. But the services are very, very consistent around the globe, and the responses are very, very consistent around the globe from an investor's perspective. So that was one, quick
Yeah.
story there of how people
Yeah.
think, yeah, but it's just different here, and
Yeah.
it really isn't. I think also from not only from an investor perspective, but from the advisor's business, it's very consistent on a global basis as well.
Yeah, and it totally makes sense too when you think about it, right? Like, listen, if I'm your client, I'm bringing you my money. This is the money that I've accumulated, and I'm entrusting you with it, and it's the fundamental crux of our relationship right now. Because if you mess that piece up, if that piece does underperforms or whatever, none of the goals we set matter. None of the financial planning ideas we discuss, like, hey, I brought you 1 million and now I only have 600,000. I'm not happy with this, right? So so it's just no, it makes sense that that is always going to be what somebody's number one priority, unless they have some other like traumatic experience in their life, or they have a child who is injured, or they have family that you have to take care of with other certain things. But in that case, investments matter too, right? Like, do I have the money to be able to accomplish that goal? It's pretty fascinating. Well, I want to shift gears a tiny bit, just kind of thinking about like maybe how some things have changed over the years since you've been doing these types of studies. In the advisor benchmarking study that Catherine and I discussed, the study was actually 2019, and she and I had the conversation in 2020, which feels like a million years ago, right about now.
Yeah, yeah.
For real, because like it really does. I had to ask my people like, did the pandemic really start in 2020, or is like I'm trying to figure out like it just feels like a haze, right? Like life has really dramatically changed a lot, or we feel like it
Yeah,
has. And
absolutely.
I know advisors think like many of the fundamentals of their business haven't changed too much in the past few years, but I think they have. I think we've heard a lot of feedback like, oh,
Mhm.
the way I do business, where I do business has changed from advisors. And I suspected many of the investors think the same way, by extension. So many of them have some different expectations of their advisors. What have been the biggest changes that you and the team have seen in recent years from the investor perspective, like what they expect or what they need from their advisor relationship?
From the investor's perspective,
Yeah, from the investor's perspective,
yeah,
if they've started to
yeah.
voice like, "Hey, life's different now," or new priorities have bubbled up because of what I just went through over these last couple of years.
I think I'll give it an opinion, some thoughts around that
Mhm.
question. That's just jumping into my mind here, and then I'll also address it with some of the things that we found in the study, where we actually have some data around that. And I think that pandemic, and I'm with you. I go back to, well, it's just a couple of years ago. Well, in our mind, it's 2, 3 years ago, and it's really like 5 to 7 years ago.
Yeah,
It's just
yeah,
that just seems to be the way it's sort of been
yeah.
lately. But it's a really good question because you think through, hey, what was that experience that we're all trying to deliver going into the pandemic? Obviously, that hit that changed things in a very significant way. And what I think that did for many of us, I think that did it for Dimensional in the way we work with advisors. I think it did it for advisors in the way they work with their clients. Is I think it gave you a lot more comfort and confidence to say, let's try
Mhm.
something new. We were forced into this totally different way of interacting, communicating, and it worked. And so I think there's an expectation of, I think it's okay to go out there and try maybe a new way to communicate. Maybe we try a little bit of virtual, but in person, or maybe we can do it in a little bit different place, that kind of
Mm,
stuff, and how we do it. So I think he gives you a little leeway to experiment with some things. So I think that's good. One of the questions that we did ask in the last study, is okay, going forward, how do you want to interact with your
mm,
advisor? Because I think it was probably, maybe 6 years ago or so, we asked that question in both the advisor and the investor study of, how do you want to interact with your advisor? In person, on the phone, virtual. And virtual was like 8%. Like it just
yeah.
didn't really cross too many people's minds. Some advisors were doing it and very, very effectively. And they were huge advocates of it, like 5 years before the pandemic.
Yeah.
Pandemic hit. And so then we asked a similar type question. And, one of the questions we say is, well, how many times do you want to speak with your
Yeah.
advisor? And the answer on average was about 3.8. So that's speak to. It's not just me, but speak to. And then we asked, okay, as a follow up, what does that mean? And about half of that was a virtual interaction and half was in person. So there's still an appetite to get together in person, but probably less than it used to be. I think now the
Yeah.
efficiency of virtual is just so advantageous for both sides
Yeah.
of it, and people are very comfortable with it. I think what that does, though, are a couple things. Is if you're interacting virtually now, and there are charts you're trying to show them, or maybe some different graphics, or you're trying to keep their attention, you better be incredibly dialed in on how effective
Mm,
you are at that, what tools you're using, because in some cases they're on their phone, right? And they're not
yeah.
going to see whatever page you're holding up or whatever you're trying to share with them. So, you got to really spend the time to think through this and deliver a proper experience for that. Know your backgrounds, know your camera angles. That's all part of the client experience.
Yeah.
That stuff matters. Just like what we were doing, on this one, you got to get that stuff right. The other thing I think that's coming into play, and this is something that, again, you have to be very thoughtful about how you're communicating with clients, and this is really societal. You think about our attention now and our time. There is so
Mm,
much competition for our time and I think our mental energy now in society
right.
today. And so the fact that, okay, I am going to make a couple hours available for my advisor, that's getting harder and harder, I think, to come across. And so when you have those couple hours, there's probably so many more distractions now, whether you're virtually, maybe they got a phone in front of them, stuff like that. So what are you going to do to make sure you maximize that hour to get the points you're trying to get across, establish a relationship and a rapport with the client, make sure they're hearing what
Yeah.
you're saying. Most importantly, make sure you're hearing what they're saying
Yeah.
and what they want to talk about. So I think you just got to get really, really clear and dialed in on how you're going to have those effective communications. I think the other part of this, and I'll stop here too, is the expectation for a response for something is so immediate now. And by
Mm,
that I mean the ease of doing things. So this is where you see it with advisors, and I think they're doing a very nice job with these kind of things where the ability to book a meeting, the ability to go online, whether it's to book your haircut or book a meeting with your advisor. Like you want to be able to click a button and do it right then. Like I don't want to pick up my
yeah.
phone and have to be on hold and wait to do that stuff. We need instant responses to this. And you mentioned your kids. I've got kids in the early 20s. I see it with them where they're like, yo, hey, dad, check this out. And they show their phone and click on something. If it doesn't pop up in a second, they're literally like, okay, well, never mind. And they put the phone down. Like there's just not
Yeah.
the patience for those
Yeah.
kind of things in communication anymore. And so you got to be real thoughtful how you're going to make sure they're hearing what you want to say.
I I love the points that you just made there, and to kind of echo what you're talking about. The need for being adept at, if you're going to have digital communication. So if you're going to be using Zoom or some other tool to hold your client meeting, you had better get good at holding their attention. And I say that because, hey, listen, we've all been on a webinar. And you're lying if when the webinar is going on, you're not kind of like poking around on the website, checking your email, doing other things other than paying attention to the webinar, right? That's why we decided, all the webinars that we produce, we decided to do them a little bit differently and make them more conversational, actually have the guest and the moderator on like speaking, because like you lose somebody's attention when they're just looking at slides. And if they know you can't see them, they're out. Right? So I
They're
love the
petting
fact
the
that you're
dog.
Yeah.
eating cereal. I mean, that stuff's going on.
We all do it, right? You're watching the football game. You ever call somebody and you know that they're watching TV and they're not paying attention to you? So that's happening. So you want their I love the notion of that you really want to make sure you grab their attention and get adept at this. Like, how can I make sure that this is a vibrant and meaningful engagement with the client? Because at the end of the day, it is a relationship business. You want to make sure that you can
Yeah.
maintain that, and you can do that on these types of things, but you gotta be skilled at it. So it just takes some practice and kind of noticing what works and what doesn't work. And I love the other thing that you mentioned, the immediacy expectation, right? The convenience and immediacy of interaction or feedback on something. Heck, it goes down to like texting somebody. If you haven't shut off like, read receipts on your text, so people know that A, you got it and that you've looked at it. And so now there's enough like, hey, when's Mark getting back to me? I know he read this thing, right? I want to know when I'm going to get a response. And so your point is really apt, right? Like now some of this you could build in, right? You could do things like add schedulers to your website so somebody can book a meeting with you with ease without actually having to go back and forth with 20 different emails and those types of things. But give some thought to, or at least get good at setting expectations. Like I have a 24-hour turnaround time or something like that, especially on the weekends for something.
Yeah, yeah, really. Well, where I think that ties into as well is, just going back to sort of the engagement and the attention span of, I think the world we're in now is, we like to use this term, the customization.
Okay.
Both we're seeing it in investment solutions, right? And that's been pretty quick the last 4 or 5 years of you're seeing a real true attempt to customize investment solutions for clients. Maybe, mutual funds are appropriate for one client, maybe some SMAs for another. More that idea of, hey, one size model doesn't fit everybody anymore. There's got to be a much more thoughtful customization and convenience around it.
Right.
But then I think on that client experience, it applies too, where you think, well, I write a newsletter, right? Is that appropriate for all of my clients? I don't know anymore because again, if people
Mm,
look at something and say, yeah, it's not really of my interest, they click it off or don't even read it. Yet maybe there's something very impactful in there later on. And so one of the things we saw in that investor study, Mike, you mentioned is how do you measure the value of your relationship with your
mm,
advisor? And is it investment returns? Is it they know me? Things like that. And the number one choice consistently over the years has been peace of mind
mm.
around that. But if you look at it then and break it out a little bit demographically between ages, you see, the older folks, it's absolutely about peace of mind. But you start to
Yeah.
see this idea of progress towards goals creeping up there in some of the younger ages, which makes total sense, right? Because that's that's where they're at in
Yeah.
life, with their
Yeah.
kids, and that's what they're working towards. A lot of the higher number of clients, the advisors we work with, are certainly more in that older retirement age, so they're there now. It's just sort
Yeah.
of keeping it in the peace of mind around that. So that's where I go back to your form of communication. If you're just talking about things that are relevant to perhaps a retiree, you may lose a third of your audience on that stuff. So does it make sense to start customizing multiple newsletters? Well, that takes time and energy. Writing's difficult, but you got to figure that stuff out. I think now for this more customized, I'll say tailored client experience, to where you can still do it at scale.
That's such a profound point thinking about you may have to customize and personalize your digital communication because if that's the way you're going to be interacting with the client, it's going to be a little bit different and nuanced than the way it was before because we think about the world of an advisor pre-pandemic and let's even go further back 7 8 years ago, right? So before Zoom became ubiquitous in companies, broker dealers and RIAs were comfortable allowing advisors to use video chat for things. All of your relationships were basically in person and maybe on the phone for the most part, right? And you had some print and so forth, but for the most part, you were going to actually talk to somebody, and the foundation of the relationship was built first in person for the advisor and the client. But now we're entering a new world in which it's very likely that some of the relationships that a client starts with their advisor, or some, excuse me, with the advisor starts with their clients, are going to be digital first and maybe digital only. And I wonder if you're seeing some change in behavior on the advisor's behalf in recognition of that, because I can imagine like one thing that pops in my mind immediately is I am much more likely to be loyal and sticky with somebody I have an in-person relationship with than I am if I just kind of clicked a few things and we've chatted with each other online. If I decide that I'm going to leave, so like, I mean, are we expecting attrition rates to change dramatically for advisors? Because if you've never actually met one on one with me, it's not that painful for me to switch to somebody else. I don't have to like look you in the eye and go, "Sorry, Mark, leaving you."
Well, I think you're onto something with that question. I'm one of those that believe in person still matters quite a bit in a variety of
Yeah.
different ways. But I'll go back to the first part of your question. And we're talking about some folks that used to do largely virtual, even before several years before kind of was a thing with the pandemic. And you talk to them, and they would say, "I can't believe more people aren't doing this." Because it's
Mm,
such an efficient way to run your business. And I think the key goes back to that of setting proper expectations with a prospect as they're
mm,
coming in. Because what this advisor that's coming to mind would say is, "Hey, listen, here's how," he would meet locally, certainly in the city he lived
mm.
in with clients for sure. But if they lived out of the city, he wouldn't spend the time to go travel just because
Right.
it's time intensive. And so for those folks that were coming in that lived outside the state he worked in, he would say, "No, listen, here's just how this is relationships going to set up. If you're comfortable with doing kind of a virtual type relationship, fantastic. If you're not, that's okay too. But just from a scalable perspective and a business perspective, I won't be making trips out there." And almost all the prospects said, "Yeah, it works totally fine." And half his clients were virtual that way. And I asked
Mm,
the question to him, well, did you see a differential in your referral rates that you were getting between in person, let's say more local clients
yeah.
versus somebody that was virtual? He says, "No, no difference. Same referral rates, whether in a lot of those virtuals, I've never met him in person before after several years."
Interesting.
So it
Yeah.
can be done. It can be done very effectively if you just set the right expectations around that. With that said, I still think there's magic to being in person. It just
Yeah.
enhances, I think, what you could probably do virtually. That's just sort of my opinion and my experiences around it.
Yeah. Yeah. It'll be interesting to see how it evolves, right? Because again, you have a and it's not even just one demographic, right? Like you've got a new populace that some has been shaped by the tools that we've been given, and some tools we were forced to use because of a short period of timeline where we couldn't be in person, where people are very comfortable talking virtually. Like my parents, my goodness, they prefer to text me than talk to me on the phone. They just when did that happen? And it happened really quick. All of a sudden, it's just like they'd rather call me, text me to say, even stuff to I'm like, isn't this a phone call conversation? I'm getting like texts from my parents about that type of stuff. So demographically, I don't think it matters in terms of an age bracket anymore. So it's definitely some stuff to be mindful of. Let's shift gears a little
Hey, can I
bit.
just mention one thing around that,
Oh,
and then
please
we can
do.
move on?
Yeah,
And
absolutely.
again, I just want to be very clear. Virtual is here to stay for sure,
No, for
and I think
sure.
it's very effective. It's just maybe there's some ways you just want to think about enhancing it with some in
Yeah.
person. But going back to the comment about older folks, and that goes back to this advisor I was mentioning earlier. He would say that everyone thinks that it's the older folks that aren't really capable with technology. He goes, "My experience has been the opposite. They're very
Mm,
comfortable virtual because that's how they interact with their grandkids so often. So the idea of
yeah,
FaceTime and being there, no issues with it. They're very good
for
at logging
sure.
in and dialing in. So just, we sort of have our biases at times, but again, I wouldn't always trust them. Just make sure you reach out to clients and know what their perspectives are and how they want to interact. It's really probably as simple as that.
Well, and frankly, it's like if if you're starting to get into an older part of your life, you may not want to drive to an advisor's office. You may not want to have to worry about hosting them at your home, right? Because like there certain things become more challenging as you get older, and so embracing digital technology, which has been made easier and easier. It's not like clicking talk via FaceTime on your iPad is all that difficult, right? If we can do this type of stuff. So I agree with you wholeheartedly. It's not going anywhere, and in fact, it's going to accelerate. And I think it's up to the advisors to embrace it in a way that it continues to have strong relationships with their clients, right? To foster strong relationships with their clients. Um, well, okay, so let's shift gears to this other. This is an area that you and your team are particularly passionate about, and I'm really excited to learn more about. And I purposely only skimmed information on this so I wouldn't come in like knowing all the answers. So, yeah, in our prep call, you mentioned your Dimensional 360 program, and described it as a program that helps you be as successful as you can be. I think I paraphrased it correctly for the way that you mentioned it. So before we dive into the details of the program, and I do want to hear a lot about it, let's define success because that's different for everybody, I think, because the nuances are going to matter here. So the framework that you hit on the Dimensional 360 program, it says number one, investments, communication, and then number three, strategy. But let's start with like what is success, and then we can dive into all those types of deals.
Actually, you phrased it really, really well. And I like to use a similar type language, which is, what all this is designed to do, this, tools and resources, is to help advisors be as successful as they want to be. And we say that because success does mean different things to different
Mm,
people. Some firms absolutely just, they want to grow revenue, and that's totally fine. Others say, I have a wonderful lifestyle business and I just want to keep that going. Others say, hey, I want to solve some succession. And if I can get some of the
mhm,
ownership down into next gen, that's success. So some of these major initiatives or in how success is defined is very different by firms. So with that said, then, that's what we want to do to design
yeah,
a support structure that can be flexible, can be very modular,
yeah,
depending on what the advisor is trying to achieve there. So it's hard to say what success is because it's there at the
yeah.
individual firm level. Now, you did a good job with your notes there, good memory there, kind of laying it out of what Dimensional 360 is, which there are those three major pillars. It's the investments, the communications, and strategy, as you mentioned there. And we think about that almost in terms of a chronology, in terms of the
Hmm.
relationship that we've had with advisors. Which for us, it's generally the investment solution that draws advisors into working with Dimensional. And then from there, it'd say, hey, I love what you do on the investment side, but it's a very unique investment approach. This idea, the way you use prices and making decisions around differences in returns and securities, the way you implement, how it's different than indexing. It's not really traditional stock picking. So, how do
Hmm.
I talk about Dimensional? How do I communicate some of these ideas in investment philosophy? What resources do you have for me? So that's sort of how it developed out communications over time. And then we found that, hey, if you got a great investment solution, you can articulate it well with clients, you are going to have business success.
Hmm.
And what do you need to do to be able to think about your business as a business? And for a lot of advisors out there, they got into the business out of the love of the investments, the planning, taking care of
Yeah,
clients. And of course, they do that well and they're good at it. Now they're going to have success. And now all of a sudden you got this complexity of, man, I got to manage a bunch of people. I got to deal with operations. I got to deal with compliance. How am I going to train and develop all these great talented people I've hired? So it gets complex pretty quickly
yeah.
there. And so that's where we built this out around those major pillars, just to help each firm depending what they're trying to accomplish.
I love it. I love it. It is true. It's like, I say it almost every single episode of this show is that, most advisors, the ones who've been here for 20, 30 years, right, which are your mature advisory businesses, they got their start as stockbrokers before they were called financial advisors, right? So they answered a call probably somewhere to basically, hey, become a stockbroker. And they learned how to sell. They probably very similar to what you see in the movies, a list of names was dropped on a desk and says, hey, listen, you're going to train for the Series 7. While you're doing that, you're also going to call these phone numbers and they're going to introduce them to a senior rep. And da, 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 da. So their life evolved that way. And then now we've added, to your point, complexity in the way that you do business. It is not just selling investment products. It is now developing relationships and helping clients with their financial goals. As you mentioned, most advisors now are doing some form of financial planning for their clients. So it's growing a lot. So I love the fact that you're saying, hey, listen, we need to recognize this, here at Dimensional. We need to help advisors navigate this journey because if they're going to be as successful as they want to be, and I love that you called out lifestyle business being okay, because a lot of advisors,
Absolutely. Yeah.
great
Yeah.
lifestyle, dude. You make a lot of money and you play a lot of golf or whatever it is you like to do. There's nothing
Well,
wrong with that, but
and you're taking good care of clients too.
yeah,
It's great. There's absolutely nothing wrong with that. And that's the beauty of the industry is serving clients well. They're having great experiences. You're having a nice life experience, good business
that's right.
experience. That's a great model. Nothing wrong with
Yeah,
it.
yeah, and but you just have to make sure you have the right tools there to ensure that lifestyle maintains. So I was talking about like there's a lot of good value here in the industry to help advisors maintain that lifestyle business and not have it, shrink as they age and
Yeah.
their clients age with them, right? To make sure, hey, listen, everybody's going to have some form of attrition, and whether that attrition comes because clients die, divorce, or leave you, or they start consuming their assets. They get into a new phase of their life where they're into the net redemption category, and they're not just seeing things grow. How are you going to maintain your lifestyle if that type of thing happens? You have to have a plan in place and so forth. I can go on forever about this. It's one of my passion projects. Anyway.
Yeah, you're right. How do you replenish a pipeline?
Yeah.
And referrals are still an incredibly effective way to do that. I think the other thing too, and you're really seeing this come into play, there's a responsibility to your clients to make sure that there's some form of succession. And
Mhm.
even if you're a sole owner of a business, the sole advisor, I should say, still having something in place there. If something
Yeah.
happened, the clients will be well taken care of in this particular situation. So, that's something I think one of your earlier questions is sort of what are you seeing within
Yeah.
the industry going on? And of course, everybody knows succession is a massive topic, whether there's some sort of a deal around that or maybe just getting ownership down into your employees. It's
Yeah.
something that's been around a long time, but I feel like now it's real, so to speak, in the sense that those folks have been talking about it for 10 years. They're just now 10 years older, and we know the demographics around a lot of the owners and founders
Yeah.
of these firms. And then, of course, the valuation has been something that's just hard not to talk about
Yeah.
these things. And again, you have to do it for taking care of your clients and your employees too. So that's been front and center, and we can dive into that as much as you'd like
Oh yeah. I
as
mean,
well.
succession's so key. I mean, I think the pandemic threw it into stark relief how important succession is and emergency continuity plans are, because the pandemic was particularly harsh on older folks. The older you were, the more potentially lethal the disease was. And well, we hear all the time that the average age of a financial advisor is like 62. Well, if that's the average age, guess what? There's on the one side of that bell curve is people who are older than 62, and some of them significantly older than 62. So they were susceptible. So like, what happens to you and your clients' welfare if all of a sudden you were hit by an illness or the proverbial we've actually changed the phrase here. It used to be hit by a bus. What if you're hit by an Uber? Is what we used to use on the show. So, but no, it's true. I think deservedly so. We should be shining some light on this type of stuff, and this is actually a great segue into the next topic about multi generational businesses or in the shift in generations. Because one of the things I've talked about on this show a lot, and I think you and I might have talked about it in prep, is this is a relatively new profession. We still have the first generation of financial advisors working. Some of them have retired, but like we still have Gen Ones, right? As I just mentioned, they used to be
Absolutely.
called stockbrokers, and now they're called financial advisors. So, uh, however, right now, which is really interesting, we are seeing the third generation and maybe even the fourth generation of advisors in the early stages of their journey as a and that raises a couple of really interesting questions that I got to credit to you, because you kind of teed these up in the prep call. I love it. Number one is, how is G1 and G2 advisors, how are they going to adapt to a more complex businesses? Like, again, we've talked about some of this digital stuff and the world is changing. And then number two, how do G3 and G4 advisors develop their presence with high net worth clients? I love that. So I want to hit both of these. So let's dive in first. How are you seeing the original, the OG advisors adapting to a new complex environment? What are you seeing that's working for them?
Oh, a couple of things come to mind there, and we talked about that a little bit earlier. They get into the profession, love of the profession, do it well, have success, and then you start seeing them and you're talking to them, and they say, "Okay, I'm growing, and I've never been more frustrated in my life because now
Mm,
I'm spending all my time doing this or that." And one just comes to mind. I think they're about a $500 million firm at the time, and one of the partners just said, "I've never been more miserable, and we're having the most
mm,
success we've ever had." And he goes, "If I have to do more operational type stuff, I'm just going to have to think about the industry as a whole." I'm like, "Well, it sounds to me like you need a dedicated head of operations." And
yeah.
that's about the time in the growth of a lot of these firms where you see you start getting in where you've been a generalist. Now you got to get real specialized and go to where your skill sets are. So you bring in somebody to run operations, and No, it frees them up to go do the things that they enjoy.
Mm.
The operational person will do the stuff that they're good at and enjoy doing. And so that's sort of part of that G1, I think, the G2 evolution a little bit around that. I think is part of that growth where it gets a little complicated and challenging too is having a real honest, I guess, assessment of, the people you had in place that got you to a certain size of a firm, are they the ones that still can get you to that next level? Maybe they got you to
Right.
500 million to a
Right.
billion. Can they get you to 5 billion? Maybe, maybe not. And it's okay if it's not. It's just you can direct them to where their skill sets are best suited for the organization, and maybe
Yeah.
find where you have some gaps. So I think those are a couple of things to jump out from that. And then obviously you have the ownership issues there, and
Yeah.
we'll dive into that one here in just a minute. But what we've seen too, and I know you've talked about this on your show, of no, these firms have success. And so you hire new advisors to help you out with the business, and then the expectation is, well, these guys go get some business. And
Right.
like, well, you hired me as a service advisor, not to go get new business and do business development. So I think there's always been some tension around that over the years. But it kind of gets to that your point there to me of that next generation then
Yeah.
of what being very clear about the expectations. What do you want these up and coming and next gen advisors to do from a client facing perspective? And how do you get them trained to be effective in doing that, whether it's servicing or business development? And one of the things that we talk about, that middle pillar of Dimensional 360, which is that communication. And we were doing a workshop with a pretty big firm, multi-billion-dollar firm last year, and all the client-facing people were in their room, and we built out, I think, a very effective framework for communications. When you think about, we call it the 4S framework, but it's
Okay.
the script. What are the things you want to say?
Yep.
How you can use storytelling effectively? What can you draw? A sketch, we like to
Yeah.
call it, and then supplements, which are, hey, so what are some of those supporting materials? And each one of those can be very effective in engaging a client in trying to communicate some various aspects to them. But as we were talking about this room, we asked the question, how many of you use these things in your meetings? About half the room raised their hands and said, yeah, we do
Yeah.
consistently. Well, who are those people that raise their hands? It was probably those over 50 years old, right?
Mhm.
So eventually you figure this stuff out. You do thousands of meetings, you eventually figure out what works. Now, could you do some training to where, hey, with these younger folks then, and I say younger, meaning somewhere between, coming out of school, undergrad to maybe it's mid 30s, somewhere around in there,
Okay. Yeah.
instead of now learning it over 3,000 meetings and getting really good at it, can you do some training and shorten that up to, 300 meetings and become
Yeah.
very effective? If you're a 28-year-old, you're not running around with $5 million people too often, $5 million
Yeah.
of AUM, So what kind of training can you do to have, I like to use the word presence,
Mm.
where you're trying to establish credibility with somebody. Let's say you're, again, 28 and you're talking to a 60-year-old couple with 5 million bucks. You try to establish credibility, and you probably go to the aspect of, well, let me just show you how smart I am, how much knowledge I have.
Yeah.
That may not always be the right approach. There's other ways to probably engage with that particular couple. So that's what we think we can do a lot with this younger generation to help them
Yeah.
in their own training and development around that.
So important, Mark. I tell you, I've told this story I think once or twice on this show, and I've many times over the years. One of my favorite things to do when I speak at an advisor conference is I like to go to like the cocktail party or whatever the night before, and mix and mingle with the advisors that are there. Because I typically speak at like top producer events and things like that, right? And so I like to ask them, how many years were you in the business before you felt successful? Like, when did you feel like you got this the business? And more often than not, the most common answer is 5 years. Right. So it takes a while to get your sea legs under you to develop some of those things. Like you said, like sketching things out or whatever, having your stories that work, that you're testing things out as a person. But what's frightening is I saw the stat and I can't remember exactly where I pulled it from, but it was for FINRA registered advisors. And it said 85% new FINRA advisors don't make it to year 5. They wash out by year 4. So in other words, we are hiring an amazing amount of people into this industry who quit before they get to year 5. But what I'm saying, and now this is anecdotal, maybe you want to throw this into your study, is I know that if you get to year 5, that compounding effect of all the reps you've had and the small clients you've had and that refer the new clients and they start to add new assets or whatever, you start to feel like you have escape velocity in year 5. So the stuff that you're talking about is so important for this industry. Like, how do we get the newer advisors, and whether they're fresh out of college or they're a 32-year-old, early career changer or whatever,
Mhm.
how do we help them accelerate to get to the point where they feel comfortable and confident that this is a viable career for them because we know what's ahead of them. So, anyways, that's my little,
Oh
I
boy,
don't know,
that's a
drink induced rant.
super important point. And it was funny when what jumped out to me. You said, it kind of takes 5 years to get their legs under them to where they're feeling effective.
Yeah.
Those must be super talented people. I was just even
Yeah.
thinking for me, my man, that's got it. It takes a while. So
Yeah.
you're ready to go and you can respond to almost in any environment. I would have gone well more than 5. So they must be very talented. But
Well,
it's
yeah,
a
the
really
top
sad.
producers. Maybe that's
Yeah, well, that's probably. But there you go.
yeah.
You're the best of the best. But it's a really sad statistic, isn't it?
Yeah.
That people will blow out of the industry before 5 years because it can be such an incredibly rewarding industry for people. And it is a very rewarding industry
Yeah.
for people. And that's something I think we all need to keep thinking about is how do you get more awareness around what this can be for, folks coming up through college and make it a very rewarding profession just to get greater volume of
Yeah.
people coming in. But what you're touching on, I think, and for now, I'm going to go for the younger folks. We can talk perhaps about the career changers here in a minute, but people coming out of college, what we do know, and you've probably seen it with your kids, we've seen it with mine, and certainly the hires we've had here at Dimensional, is they do care deeply about their development and their training and development. They want to have an understanding around what does career development look like.
Mm.
And I think, in fact, one of the things that a guy named Darren Roberts. He's a professor here at University of Texas, UT. And he started a really interesting class years ago. He has a fantastically interesting background. He was in the NFL as a coach for a while. And then he got in and started a class there at UT, which was designed to help develop leadership among athletes. And then over the years, it's become, I think, one of the top third most popular class at UT. And it's about developing leadership skills, for young folks. But one of the things he said, 'cause I asked him the question, all of us, we get old and we do back in my day, I walked through snow and this and that. So I asked the question, are they really different? Or is that just more in our mind? Or what we're seeing here in these younger people coming out of college really different?
Mm.
And his comment was, I've been teaching this class about 8 years. And he goes, what I don't think they're too much different than us, except they will hold you accountable. They don't have the patience that we had, where we were kind of coming in, we got a job, we just kind of wait. And he goes, they're not that patient. He goes, if you tell them this is what we stand for as a company, sort of our mission, and if they don't see it pretty quickly early
Mm.
on, they're very quick to make a change. Or, hey, you said this is what my development, my career would look like. And if it's not developing at the speed of which was communicated to them, at least if they understood it, they're pretty quick to make a change. So I just thought that was an interesting perspective from somebody who's been involved in that very closely for 8 years, because
So
I think it
important.
ties into your point there around that 5 years. If whatever their expectation is, if coming in, and this is, I guess, a FINRA through a licensed experience, something wasn't met
Right.
in what they were looking for, or at least communicated to them. So I think we all got to get better about setting proper expectations. And that doesn't mean you accelerate them to a program.
No.
It's just you're very clear to say it's going to take you these many of years to be really good at these particular skill sets to get you to the next level. And if we lay that out, I think they can hold us accountable to train them
Yeah.
properly, but they have to understand there's a real progression here. You have to get to a certain point to deliver the experience that your organization would expect for their clients.
Well, and it's so important to kind of highlight, to build on what you're saying there, like to recognize that there is a war for talent out there. And we've talked about, like, you go drive by any place here in Austin where we are, there's a help wanted sign up there. Now, look, your financial advisor is not looking to go work at, Dairy Queen or whatever. However, The other advisory firms around town would gladly take your advisor off you who's already been licensed and is ready to rock and roll if they're not feeling fulfilled. So it's not even just about people quitting and exiting the industry. It's like there's a war for talent. Smart people have options, ambitious people have options, and that is true in our industry, just like it is in the tech space and others. So treat your people well, but also make sure that they're getting what they want out of the relationship, or you do risk losing them.
Well, and
Crazy.
that's where, we again, part of that communication pillar for us is, yeah, part of it is to say, hey, here's some resources and content and things like that you can go use with your clients,
Mhm.
because the whole goal of that is, instead of a bunch of advisors, I like to say, messing around with PowerPoint, if we can give them some
Yeah,
things that are high quality, they can go spend more time with clients, which is what's going to grow the business
for
and
sure.
most important. But the other part of that is, a lot of these organizations, they're just not at the scale or size to be able to provide a full on effective training
Mm.
program for people. So that's something that a lot of our clients have been able to leverage. The things we've learned over the
Yeah.
years is we're growing. I always say here at Dimensional, we're very similar to an advisory firm. We care deeply about clients. We want to deliver a great experience. We're trying to find talent, hire them, and develop them and train them. We just have a different scale, perhaps, than
Yeah.
advisor
Yeah.
firms, but it's still the things you're trying to accomplish and grow as an organization. So
Yeah.
we just try to take the things we've learned over time and go out that and offer it up to our clients.
Well, and that's, one of the reasons why I love having folks like yourself on the show, right? Is that you have the bigger resources, you have the knowledge, and you've actually taken the time to go out and study the industry, whether it's looking at the advisors or the investors, and you can have this macro viewpoint, right? But you can bring it down to an individual advisor level as well. And so it's actually a wonderful resource for individual advisors, but all of us in the industry to learn from that. So I really, really appreciate it. That being said, I know we're basically just about out of time, but I want to hit you with my one last question, which I love. Is because of that macro view that you have and the unique perspective and how many advisors you're able to talk to, are you seeing anything bubbling up below the surface that maybe hasn't hit the kind of, let's call it, cultural zeitgeist yet for advisors, that we can be on the lookout for? Like, hey, be mindful. There's a new trend coming that you may want to think about.
Bubbling up. I'll tell you what comes to mind on that. There's been a move here in the US for the last several years. Obviously the consolidation, you're seeing a lot of these firms going up and buying up, the big companies buying up a lot of advisors. Certainly that's
Mhm.
self-succession for many firms. And you just getting these bigger firms. You're seeing it also with maybe some of the various asset managers or custodians that are getting into offering advice. And that's something that we haven't done. We don't want to compete with our clients. Rather, we support them. But I mentioned that because it's interesting to see how in the U.S. it's kind of moving towards this vertically integrated entire
Mm,
solution of custody to advice to investment solutions. And yet you go to, say, Australia, for example, and they had that in place. And over the last 5 years, that has completely been unwound. Part of it was
interesting.
regulatory requirements because they're starting to see a bunch of conflicts coming into play. So I mentioned that to say it's very interesting to see how things ebb and flow
Yeah.
over time. And you mentioned the stockbrokers earlier. It used to
Yeah.
be these big warehouses with stockbrokers, and there's this move to independent advisors where they had their own company, and now you're seeing a bunch of these consolidators come in and buy up a bunch of these firms. So
Yeah.
it'll be interesting to see how that unfolds over time, to where these large firms, does the young up and coming talent stay there, or do they go start their own firms
Yeah.
over time? That's what's going to be super interesting to me in the next 5-7 years.
I love it. I love that notion of like, hey, we get big and then we get small again. I just keep like it keeps doing that, right? Just as we get big because maybe for safety or like you said, for succession reasons, and then at some point in time when the next generation of advisors are there, like, you know what would be awesome if I had my own small boutique firm? I think I'll break away and go do like so. What if that'll just kind of keep being a cycle every decade or so? You see like expand, contract type of deal. Very, very cool.
Yeah.
Well, Mark, this has been fantastic stuff. I really appreciate you carving out the time to come on the show and share all your insights. People are going to absolutely want to follow up and learn more. What's the best way for people to follow up with you individually? And then Dimensional more broadly, I guess, is dimensional.com. But how about the stuff that you're working on? How can people follow along with that?
Oh, geez. Well, me individually. Happy to talk to anybody interested. Mark.Gochner, dimensional.com. Obviously, our website, dimensional.com. There's a whole bunch of dimensional folks all around LinkedIn,
Okay, perfect.
like everybody there. But it's just something, again, going back to, it's just such a fantastic industry. Anything we can do to help an advisor think about their business, whether it's, hey, they're looking for, more efficient investment solutions or business solutions, be happy to talk to them. We can talk about this
Perfect.
stuff all day long.
Sounds great. Well, thank you very much for being on the show, Mark. Great having you
All
here.
right, Mike, a lot of fun. Thank you.
See ya. See ya. Thank you very much for listening to and or watching this episode of the Modern Financial Advisor podcast. It's always fantastic to have you with us. Huge thanks to Mark Gochner from DFA for carving out the time to share some of the great insights that he and his team have compiled. I love how DFA and the advisors and their clients who participated in the survey are so generous with their experiences. It really makes a difference when we all contribute to improving the industry. All right. As I mentioned at the top of the show, please make sure you subscribe to the podcast on your favorite podcast platform. And if you haven't done so already, give this episode a share on LinkedIn, Twitter, Facebook, wherever you hang out online. Chances are, if you found it interesting, so will people in your network. So be generous. Share this stuff out. Just like those advisors and the clients who shared with DFA and DFA shared with the world. Just share the good stuff, okay? And I like to think this is good stuff. All right, that's it for today. As always, be nice to each other. We'll see you next time on the Modern Financial Advisor podcast. See ya. Bye.